Very nice to see you. I was just told moments before coming out here that I had to try and cut the time of my presentation in half, so I'm very sorry if I'm going to be a little bit quick with some of the things. Just to start out, I would like to make the claim that the next Silicon Valley is not a place. I go to a lot of these conferences all over the world, and I feel like every country and every capital is trying to copy what's going on in Silicon Valley. And I think that's not what we need to do, because early stage investment is broken. My name is Emil Dalsgaard. I'm the CMO at Funderbeam.com. If you have any questions, feel free to send me a tweet or to either me or to Funderbeam. And I'll get back to you afterwards. So, private equity is huge. So much money is being invested into startups. It was a little bit less in 2016 than 2015, but it's a huge industry, and it's not working as efficiently as it could have. And it was actually working better several years ago than it's doing now. If you look at a company like Google, they only raised $25 million before they did their IPO. Think about that in today's numbers. It's crazy. We're a small startup. We've already raised 6 million euros. So these amounts are just crazy. And when they went on the stock market, they had an opening market cap of 23 billion. Today it's more than 650, at least it was a couple of weeks ago when I made this slide. And what this means is that the companies, just if you look from the value when they do their IPO until today, that's the time when everyone can buy stocks and take part in the growth of these companies. If you look at Facebook, they had raised 1.3 billion before they did their IPO, which just means that there's only a few very wealthy individuals who were able to invest and benefit from that growth. And then if you look at a company like Uber, they raised many, many billions, and they don't have any IPO inside. Meanwhile, when you invest in private markets, you also have a very, very long waiting time from you make the investment until there's a return on the investment. These are 6 different studies that I found that have tried to say what is the average time from the first investment in a company until the company has an exit. So it varies, but it's usually between these 5 and 8 years. For big VC firms, that's okay, but for private investors, that's a big problem. So you don't have the liquidity that you find on a stock market. But as I've shown, companies don't do IPOs anymore, which is why I'm wearing a t-shirt that says IPO so 2015. Because in 2016, we launched Funderbeam Markets, which is a platform where we allow investors to invest in early stage companies, and at the same time, we provide the liquidity through having a secondary market. And we also provide data that is critical for both investors and founders in order to operate efficiently. And just today, we released a report about the Polish startup ecosystem. So if you'd like to read this, you can go to our website and you can download it. It's completely free. And don't have much time, so I'll just go very quickly into each of these 3 elements. First up, the data. We collect data from all over the internet, from news sources, public sources, from tweets, and we use machine learning to analyze this data so we can provide it to startups for free. Secondly, we allow investors to create syndicates so they can invest into startups as one single entity, so the startup doesn't get 100 investors on their cap table, even though they're raising capital from the crowd. And the way we do it is we create a special purpose vehicle that operates between the startup and the investors, and this is what the investors can then trade, digital tokens, and we do this on blockchain. And to show you how stock markets are working today, I'm not going to go into every one of them, but basically you have between the investor and the companies, you have a whole lot of intermediaries that are not necessary in our opinion. And because it's working locally, this means that the stock markets are only open limited times when it's daytime. So if you want to trade in both New York, London, and Tokyo, you have to do it while this is open. But in 2016, to me, that sounds crazy. Imagine that you could only go on Facebook when it was daytime where you were, or you could only communicate with people in the US when it was daytime in both places. It doesn't make sense. We're running our platform on blockchain. which allow us to cut out all these unnecessary intermediaries and at the same time keep trading open 24/7 at a much, much lower cost. Actually, right now, you can just go on and you can trade. And it runs on blockchain in the background, but you don't have to have Bitcoin, you don't have to make payments with cryptocurrency. You are investing with fiat currency, just like you would on a normal stock market, but we use blockchain in the background. Yeah, and then I wanted to show you a little bit of how it looks, but I'm out of time, so I'm going to skip that. We are launched for more than a year here in Europe, but we're also expanding into APAC. So yeah, that's what I wanted to say. The next Silicon Valley, it's not a place, it's a platform. I think there's going to be several platforms like ours, but we of course hope to be the best one. And we provide the data and the funding and the liquidity, which is what, and the great companies, which is basically what was available in Silicon Valley and why we are bringing this all over the world. Thank you very much. It was a pleasure to talk to you.